After the US announced fresh tariff globally on 1st of August, the market experienced a meltdown followed by a rebound the next trading day. According to my broker's report sent to me every morning, the S&P rose by 1.5%, its biggest rally since May. And the reason cited, traders are anticipating that the Fed to cut interest rates soon, with the 30 days Fed fund moving much higher. We will track the trader sentiment behind this anticipation and learn how to access to this fund flow. My name is Con Hao. My work in this channel is to study behavioral science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Between them, their relationship is just like the 30 years bonds and the 30 years yield. When bond is down, it indicates that the yield or interest rate is up. Similarly, the traders traded up this 30 days Fed fund futures the past few days. They are expecting the Fed to cut interest rate in the next FOMC meeting. Therefore, we saw that the US market have rebounded up strongly on this day. And why trader feels that the Fed may cut interest rate in the coming meeting? And because of this. Because the July job report numbers were much lower than anticipated. And there is a heavy downward revision in the May and June numbers as well. When job creation is lower, this also means that higher chance of recession. And remember what Jerome Powell always emphasizes on Fed's role is to see a healthy job numbers and inflation. However, since the May, which is here, and June, which is here, the job numbers were revised downward, and the July number also came in much lower than expected. Traders have anticipated a cut in interest rate for the next FOMC meeting. A rate cut or reduce in borrowing costs always bring hope to the stock market. Therefore, we're seeing that stock market continue to rally until today. But the question is, will there be further interest rate cut in the future? Let's look at the job number. And the job report seems to be heading downwards. We saw this downward trend since the COVID days. And a point of reference for a healthy job number, let's look at the pre-COVID days. And we could see that the job number literally range bound, and it range bound between about 100,000 to about 300,000 during this range. So this will be a healthy range. And how to access to the trader sentiment on Fed's coming decision. This is the CME FedWatch tools. And as of 8th of August, there is a 94.9% chance that the Fed is likely to reduce by 25 basis points. And 5.1% feels that the Fed may maintain at the current rate between about 4.25 to about 4.5%. So this site even tracked back to a month ago. What was the sentiment then, where they feel that the Fed may ease 25 basis points? That was about 60.5%. Since then, it has increased. The sentiment that the Fed will cut or may cut 25 basis points is now at 94.9%. If the job number continue to fall, there is a chance that Fed may cut this September. But there is another problem. What is the problem? Inflation. Inflation seems to be on the rise as well since the Liberation Day tariffs started in 2nd of April. So if the job number continue to fall and inflation continue to stay elevated, that's equating to stagflation. What will be the long-term trend for the interest rates? I would like to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.